What up, traders? What up, investors? Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. And yes, we are looking at some charts that you've probably never seen before or never heard of. You've probably heard your grandpa talk about this on the bright green couch in his front room of his house, of talking about what stagflation was. Most people haven't really seen this since like the 70s and 80s. So what is stagflation? A lot of these charts, blah, blah, blah. But this one right here basically breaks it down the best right here. What is stagflation? Three bubbles. Lower economic growth, down arrow. Higher inflation, up. Unemployment, as well as up. We basically have two of those three, so we're at 66.66666% right now of meeting the demand of stagflation and potentially being in a recession. A lot of people on CNBC are saying things along that tune. Another good little graph here is basically here, inflation higher, overall economic growth. What do we mean about economic growth is basically a GDP growth quarter over quarter. Doesn't mean it has to go negative, it just has to slow down from the previous historical levels. So looking at that, let's go ahead and look at the QQQ, the NASDAQ. As you can see here, we're looking at a weekly chart. We're down quite a bit here, nearly 2.5% today for the day here. Not looking too good. If we pull out the somewhat overall trend here, we're still really kind of competing lower here. We're bumping in right into some of these trend lines on the way lower here, potentially a false breakout, especially here on the daily chart here. That 21 EMA has not been able to kind of get back above water, because again, the 21 EMA is well below the 50 simple moving and the overall 200 exponential moving average as well. So very much in a downtrend still, considered a bear market. I'm pretty sure it's that someone out there who's like so completely ticked off me doing these air quotes, go ahead and leave a comment down below. On that note here, where could we see this potentially kind to maybe come back to life? There's a lot of different scenarios that we can do. We can do initially on the daily chart here. We can do from the previous bounce here to this. We are coming into some levels we talked about on 256. Of course, this is on the NASDAQ, but more or less, I want to do a longer term view on this and look at the overall levels of the weekly chart, looking back 5 years. Not saying this is going to hold. This is just one or two data points that are supporting levels here around 277.87 to be precise here. That is an initial level that we could see ricochet off of, or if we continue to break through. On this overall chart, you're seeing the yellow line being much more aggressively in a downward trend. Let's be honest. Most people, if you don't know right now, we are on a downward trend in the overall market. This is true on SPY as well. You can see here, coming back to this level here, and you can see SPY has also bounced off that 200 EMA there on the weekly chart as well. So looking for this potentially to try to hold, but it only holds if there's not enough more selling pressure coming through, which I think potentially could come on the certain scenarios that could be playing out, especially on the NASDAQ, severely beaten up. We're seeing a lot of people just like throw up their hands, give up of like, okay, I'm ready for $5 or $6 oil at the gas pump. Okay, I'm willing to pay $4.50 for a gallon of milk. I'm ready. Like they're giving up, and which is kind of sad, because at the same note, these crashes or these trends of market changes happen very commonly in the months of summer, and then we kind of have like a little bit larger fall off coming into the fall. Let's go ahead and look at those leaps or those charts now. All right, we're looking at this chart right here. The first 4 months percentage change for the years and how much of the worst years in the overall market. We're looking at the S&P 500 directly. So 1932, we had literally the first 4 months was down nearly over 28%. 1939, 17.3, 1941, 1942, and so forth. You've seen those levels. Here you see 1970. Of course, you know, if you know anything about history, that it was the beginning of World War II and also the end of the overall boom bust cycle of the late or the 20s, which is basically the 1932 level here. Looking here at the 1970s, that was when we're talking about that really stagflation and really high oil as well. Looking here again, what year is today? Let me look down there. Oh, yeah, it's 2022. And the S&P 500 is down 13.3%. That is pretty troublesome. Of course, we had the pandemic here. It was only down the first 4 months of not even 10%. So we're down more than there was the apocalypse happening. So to kind of give you a better of a sway to it, people are more in tune to this stagflation, lower economy, lower wage growth, all this kind of scenario, housing bubble pop, all these little fears and everything. And what do humans do worse with any kind of information? Fear. Psychology 101, humans do terrible, and it's the easiest way to manipulate people is through fear. It's quite astonishing in how less the common sense drops off dramatically once fear or the end of the world is somewhat entitled into the story for people to kind of, especially in the stock market. Looking at some of this data here, we're looking at the best and worst months. Again, this is looking back from 1987 to 1987 to 2018. You see, what's some of the worst months? The month of June. What happens? It's the famous phrase saying, "Sell in May, go away." Summer break happens. We usually have lower volumes. There's always kind of like an inflection point between economies, what's going on in the world, and kind of just in tandem, it's just showing signs of always having some of the worst months. In retrospect to that, August and September are not too far off. That's what we're talking about, that fall kind of change, the changing of the seasons, the way portfolio managers potentially are looking at the market. This is when we have potential run-up on elections. We have usually larger raises. This is the beginning half of the year, the last push into the last 3 or 4 months of the year, which is usually, what do we look at? Some of the best months. We have some of the best months performing in this time frame. So again, this is just statistically speaking here, looking at this level here as well. So the best and worst months are going back even further, going to 1950. Again, this is from 2017 all the way back to then. You see here, again, June being very bad month, but in record, August to September have been substantially worse over a longer period of time within the S&P 500. So what does that mean? It's just data, right? It doesn't mean that this is going to predict a larger collapse in August and September. This is just like, hey, be ready for more fluctuation, more volatility, because statistically speaking, when we have a larger percentage down in the first 4 months, we potentially have a larger dump coming into the later half of the year, and then potentially getting a bottom. It could be this year or next year. I don't know, right? I'm not a fortune teller. I don't have a crystal ball. I tried to order one, never came in because I didn't see that one coming. Just interesting data to be looking at. That doesn't mean that this is end all be all kind of scenario, just to be ready for any kind of fluctuation and be ready for those kind of impacts to hit your portfolio. So, and don't act stupid and blame it on people that, hey, statistically speaking, these months are very red. So we're in that very red month of June right now. And again, we might have a little bit of chop coming into July, and then maybe even seeing some more selling coming into August. So what am I looking at here? This is actually one of the charts I don't actually share very often, but I could share some more. I should share more with the Patreon and the overall Discord team. This is basically a chart showing here basically the different Keltner channels, but this is basically the Keltner channels from the deviation, I believe from the 21. Yeah, this is all the deviation channels from the 21 EMA on a weekly chart 5 years back. So looking at here, we know that the market has a certain tandem, a certain flow. It's very much well kind of punctured out in the sense of the trend following kind of scenario that I like to look at. Especially with the overall market, the trend is your friend until it isn't, right? So looking at this market, we basically broke the trend in the beginning of this year. The first week, we literally broke this trend and kind of collapsed. And ever since the beginning of the year, we have not been able to get back above this line. So this is basically saying, hey, we are trending lower. We are in a bearish market, and you should not be completely optimistic right now. Like that is 100% what this is saying on this particular chart. If you follow the trend following kind of scenarios. That being said, as you can see here in the pandemic low, that trend recovered really fast because of what? Brrr. Yeah, you were right. That money printer really kind of helped and bounces back substantially here. Right now, we don't have many things in our quiver right now. I'm speaking as the Fed to really soften this. They have to raise rates, but raising the rates can cause a lot of other potential because that can lower economic growth more, but they need to fight inflation first. And so once inflation comes down, they can kind of pull some more levers, do some more dilly-dads to potentially try to level this overall, okay, not leveling the overall market now because they don't really give a rat's ass of what the QQQs do. They're just looking at the overall market volatility. So looking at this really coming lower here, I'm not really going to be touching QQQ or going any kind of like trading or anything like that directionally until it basically breaks above this 21 EMA here and again gets back above it. And this goes back for ages. So we can go back a month to date here. We're coming in here to multiple levels here. We can go to, let's go all the way back as far as we can. Go to max. You can see here that we broke that trend in 08, 09, broke it, never came back. But once we tested it, Bali G jippers, we're bouncing around, going continuously higher. We have basically maybe a couple times have closed slightly below it. So this is again that December. That was that last time we saw the Fed rate try to be raised, but that was a quick recovery because they pulled back on their mandates. But this right here is very drastic here, kind of coming in here. Some unknown territory. So some of you Star Trekkies, this is unknown discovery, unknown space. We have not seen this part play out for some time. And that being said, that's why some people are raising the red flag, some people are raising a white flag, depending on what color you like. The potentially, hey, things are really slowing down, and guess what? Cash could be your friend, but with higher inflation, it really sucks. But this is something that we have to kind of get used to, and sadly, this is going to be written out potentially of being the pandemic bubble, the inflation, or the run of the 2000s and whatever. Like, I don't know what it's going to be or who's going to make the documentary about it, but this is definitely something where the trend has changed, the tide has changed, and get ready for ratcheting even potentially lower levels if we cannot hold those very short-term levels of support here. As you can see here, it has been somewhat orderly going down here because we're not breaking past that 3 deviation, which is a very low percentile of it happening. Usually that happens, or when that break of that larger deviation is when something tragically happens. A war breaks out, attack, a pandemic, something unknown. But this stagflation, inflation stuff has been a very slow burn. And it's been taking a little bit more time for people to realize on what current market we're in. And now I'm thinking potentially this time or the next 3 or 4 months, investors, traders, whatever, are going to start seeing the switch here, and we potentially looking for a leveling off period. But if this continues going lower, we're looking again like 260 to 280 to potentially even be those levels of ongoing support on the way down. So on that note, thank you so very much for watching. Don't forget to like and subscribe, and I'll catch you guys on the flip side. Peace.